It's time to play the game.
Most important to me is cash. Cash kills. So that's where we are. Keep in mind, we launch on ESPN in a week, as I mentioned. And let's not forget Netflix. They're still doing, obviously, Raw. Did a great number Friday night. We know we have a lot of room there because Vince McMahon was primarily pricing tickets for families and wasn't totally focused on maxing the opportunity there.
He's supportive of the direction WWE is going.
I wasn't asking for his opinion.
We're in the sweet spot with a lot of opportunity to increase our margin by increasing our ticket yield, especially at WWE.
An event that previously brought 70,000 fans to the Dome and $175 million to the area won't return next year as planned.
WrestleMania 2026 has moved to Vegas, and some would-be tourists are upset.
WWE equalized UFC at 59% EBITDA margins, driven largely by global partnership ticketing, live ticketing, and of course site fees, and of course our leverage. We're going to be a cash gusher. We really are, and we take a lot of pride in that because we are laser focused on cash flow, laser focused on sustainable long-term EPS growth, and that all equates to the bottom line where it benefits shareholders as long as we are pushing those returns, that capital return, to our shareholders.
It's a pleasure to welcome back to the Communicopia and Technology Conference this year Mark Shapiro, President, COO, and COO of Tko Holdings.
So when you look at global partnerships and ticket sales and media rights, hey, well, where are you guys going to go from there? We're an execution story. That's what we are right now. It's early innings. We're still trying to squeeze out more. We're going to take a bite of both parts of the apple, and we're going to try to put this on super acceleration and really gas.
Watching WWE.
Jada Yee lives in Canada and has been a wrestling fan his whole life. The 46-year-old was planning on coming to New Orleans and was in the process of making it a family trip. Now he's among the potential tens of thousands of visitors who have to rethink visiting New Orleans after the announcement WrestleMania will not be in the Superdome next year.
On site fees, this has been a story that's been building for the better part of the last few years.
If we've got a St. Louis up against a Des Moines, Iowa, if you want us back there and you've sold out and broken records in both your arenas, you have to pay for us to come back, or else we'll take it to another town. And that goes for NXT and Raw and SmackDown on the WWE side. Of course, the PLEs. And hopefully WrestlePalooza is a winner and we can bring that back annually, because that could just be a marketing bonanza for us if we do that right. Triple H is spending night and day creatively around making that what we think it can be, which is another WrestleMania or another SummerSlam. Those two stand out above the rest. Royal Rumble's right beneath that, and we think WrestlePalooza can get into that quadrant. What I would say on this front is that we need to sell all those out. We haven't done that yet. We're having a lot of conversations, everywhere from Atlanta to Charlotte, to London and Paris. I mean, no shortage of countries similar to F1 that want to see us bring our show to town. And even in the Middle East.
My wife was going to make a trip out of it with my twins, and I was going to go off and to watch WrestleMania. So it was a huge family vacation that was planned. I've always wanted to go down. I wanted to go on a voodoo tour and stuff like that. And I was so pumped when they announced New Orleans.
Across the Atlantic in the United Kingdom, Luke Walsh was planning his first trip to the United States to watch WrestleMania in person.
Just being part of the scene in and around Mardi Gras, in and around all that, I wanted to sort of fully embrace it. And now the news is we're possibly not getting that at all.
Nothing hotter these days than live events and experiences, but we're seeing no slowdown in that respect. Folks just want to get out. They've got time. They're off on Fridays, quote unquote. It's communal, and everybody suffers from FOMO, especially the younger folks in the demos that we really serve and cater to.
In February, Dwayne "The Rock" Johnson announced to a packed Smoothie King Center that WrestleMania would make its return to New Orleans, who last hosted the event in 2018. However, it seems that Las Vegas is getting the huge multi-day and multi-million-dollar event. Both Walsh and Yee say they may not go at all because of the difference in budget.
It is heartbreaking that there is definitely a gap between budget between New Orleans and Las Vegas.
Was it like a difference of hundreds of dollars or thousands of dollars?
Oh, it was thousands.
So I'll give you an example. I was just in Vegas for WrestleMania. And so me, my brother, and our friend went for just normal breakfast. We had 2 omelets and avocado toast, 3 coffees. It was $120 American without tip.
In a joint statement, the New Orleans Sports Foundation and New Orleans & Company say they plan on bringing WrestleMania to the city in the future. In 2018, WrestleMania had an economic impact of $175 million, with the majority of those attending coming outside of our area. It is not clear when the future date will be for the return of WrestleMania.
He's not a part of the company anymore. He's sold out.
Yeah.
Do you still hear from him at all?
I had breakfast with him a few weeks ago just to check in. Been a long time. Haven't heard from him at all. Obviously, the series on Netflix came out. I wanted to see kind of where he was. By the way, he couldn't have been more cooperative. He couldn't have been nicer. I mean, he was a total pro at breakfast, if you will. It's a one-on-one get-together. But he's out of the business entirely. He doesn't make decisions. He's not on the board. He doesn't opine. We don't consult him. He's got some litigation that he's working through. And frankly, he wants the privacy and the time to work through it, which is great because in the meantime, we're going to keep building TKO and WWE and expanding the horizon, expanding the opportunities. And by the way, he's still a shareholder, not the shareholder he once was, but he's still a shareholder.
Combine WWE and UFC together, streamlining the operations, growing sponsorship, live events, and more recently, renegotiating many of your media rights deals on improved terms. Maybe just thinking about all that you've executed against and how the TKO story has progressed.
One of the things that can really kill a company is hubris, especially in the management team, the leadership, the culture. So we're highly sensitive to that, and antennas are up high. And I say that because right now we have a lot going for us, right? We're really, knock on wood, hitting on all cylinders, delivering on the promise across the board from a business standpoint on every metric we laid out. And then on the PLE front, look, that deal wasn't up till the end of April. And instead, we are launching September 20th. Next weekend, we're launching in Indianapolis with a brand new franchise, which we hope will be an annual recurring franchise in WrestlePalooza. These are the extras, getting ad inventory, right? Not having to spend so much on ancillary programming and production. As we were committed to in some of our historic deals of the business. Because the most popular question that I get on the road from investors is, okay, before we can even breathe or smell the roses on the media rights deals, is, okay, you've got the media rights deal, great. You're going to break $400 million on global partnerships, which is ahead of our internal forecast. We're still trying to squeeze out more synergies on bringing UFC and WWE together under one roof. We're looking at margins. I mean, second quarter is incredible, and that's going to happen. We doubled our dividend last week, and we're embarking upon a buyback program that we promised our shareholders we would do by the end of third quarter, and last time I checked, that's coming up in just a couple weeks.
I do want to get to capital returns and capital allocation more broadly, but let me pick it up on something that you touched on partnership and sponsors and the broader opportunity with bringing more brands into the ecosystem. It's been a great growth story over the last year or two for UFC and WWE in particular. The new deals you mentioned have some ad inventory available, I think 2 minutes an hour. Can you talk a little bit more about where we are in the growth story and sponsorship, maybe how this new inventory unlocks opportunities for you?
Contractual, stable, escalators, recurring, a good place to be in more and more brands, especially as these two properties become more mainstream, want to be involved with us. You know, we've got all in broadcast integration, so all broadcast integration we control, all in arena we control, and then of course our IP in terms of supermarket aisles and consumer products we control. Week in and week out, upwards of 30 different countries, we're in the top 10 list each week with Raw. And the PLEs, the premium live events, are also returning beyond their pro forma. So that's a good story, but we don't want to take that for granted. We need them to keep marketing us. You can quickly get lost in the Squid Games or the K-pops of the world. So you have to keep Netflix focused on that. For partners, it's in their best interest, and we have work to do there. So of course we'll be opportunistic, but we're here to talk about executing. We're here to talk about strong launches. We're here to talk about more marketing. Let's expand our margins. Let's bring in that free cash flow, and let's get it back to shareholders. And if stuff comes up along the way, terrific.
On live events, you guys have spent the better part of the last 2 years optimizing some of the capacity around UFC and WWE, optimizing some of the pricing, and ticket prices are very impressive in terms of what they're going for. I think it shows the demand at the upper end of the spectrum. Maybe you could just give us a lay of the land of where you see the consumer at today, where you see demand for live events today, and then looking ahead, room for further optimization on maybe up-tiering venues, up-tiering pricing. Where's the bigger growth opportunity for TKO?
Everybody's looking for that plus-up, that personalized experience, that customized experience, that red carpet behind the rope experience. I mean, that's where fans are. It's not enough to just go to the game and sit in your seat and have a hot dog and a beer. I mean, they're all looking for meet and greets. They're all looking for advanced entrance. They're all looking to touch the trophy or meet the game winner or the MVP at the end of the game. That is what On Location does. I mean, it is the premier, preeminent, premium hospitality provider for sports around the globe. I mean, that's the business of what we do. It's just really firing. I can't tell you it'll be like this forever, but I do believe the 4-day in-office work week is here to stay. And having said that, it makes it a 3-day weekend, and people have more time, or they're moving errands to Friday, and they have more time for Saturday and Sunday to see a concert with their friends or go to a sporting event. And there's nothing like being there. That experience is premium, and it's invaluable, and you can't replicate it. And as long as rivalries stay strong and these sports remain strong and competitions remain strong, we're going to be in a good place. That WWE is not where the UFC is yet, as you know, on ticket yield. We have our work to do there. But we've seen a meaningful increase, as evidenced by the 59% margin we did second quarter with regard to EBITDA margin, which was equal to the UFC. That's ticket yield and site fees playing a big part in driving that. And we know we have more room to go. And so WWE, which granted their PLEs are mostly in stadiums, so it's not apples to apples. And of course, they have a lot more volume with Raw and SmackDown and NXT happening on a weekly basis, 52 weeks a year. We know we have a lot of room there because Vince McMahon was primarily pricing tickets for families and wasn't totally focused on maxing the opportunity there. And now that we've seen what we can do with UFC, we're replicating that in terms of ticket yield and holding back and advanced sales when it comes to On Location on the WWE side. And it's really working out well. It's where we're breaking out of just the Middle East. So, we've got a lot we can bring to town. I'm not saying all in one weekend necessarily, but it could be something where we're going to bring 3 or 4 over the course of a year, and you pay one fee to get spread out.
It could be as many as 30 site fee opportunities out there.
Yeah, more than that once you get into the Raws and the SmackDowns and all that. I mean, we've got a team that we hired Dean Garfield from Netflix, who historically has done this with Netflix expansion plans and the offices they've opened up around the world. He's a real pro. He's a real expert. He's got a fantastic Rolodex. And he has an entire team that works across the board with Nick Khan at WWE and Lawrence Epstein at UFC. And we are knocking on doors everywhere to really sell these out. But we're not in a hurry. We're not going to rush these deals so they won't max them out, because once you set that level of where you're going to be and it ends up being too low, getting a 100% increase of basically nothing is 100% of nothing.
If revenue growth drops down to the bottom line, would just be curious to get your take as you look forward into next year, balancing reinvestment in the OpEx of the business, whether that's fighter pay, whether that's more ancillary programming around the UFC and WWE to build engagement, to build fan momentum. How should investors really be thinking about the level of reinvestment?
I think it'll be a normalized course, frankly. We're running a pretty lean cost structure, and in that cost structure is fighter pay, and we're going to continue to do right by our fighters and our superstars, and the cream of the crop will be paid the premium dollars. And when we do deals like this, we don't hoard that money. We invest in the product. So our last deal with ESPN saw us give bonuses for fight of the night, give bonuses for the knockdown or submission of the night. Saw us give fees for any of the global partnerships deals we did, and consumer product licensing deals we've done. So we're going to share as much as makes sense with the stars of both leagues, and we will be very competitive. We are very competitive. We pay more than any other competitor we have in the combat sports space, and we know why we're here. And it's a team effort. It's our brand. It's the work that Dana White does on the WWE side. It's the creative force that Triple H is. It's the strategy that Nick Khan drives. And it's ultimately the hard work put in by our crews. I mean, remember, we're doing a lot of fights per week. Monday Night Raw, you got an NXT on Tuesday night, you got a Friday Night SmackDown, you got a UFC fight, and sometimes you have a PLE or a numbered event. I mean, there's a lot of events to put down. There's no breaks in this company. It's 52 weeks a year, so we have to pay for performance in terms of our people, but we're focused on it. And you'll get some of those. They deliver more in return. So it's a scale and it's a formula, and we're very transparent about it with our fighters and our superstars.
Maybe pivoting back to some of the other assets within the Endeavor complex, you mentioned On Location. Can you talk a little bit more about the longer term growth for On Location and picking up new pieces of IP, new events to layer onto the platform? And then as part of this too, the conversation I do have with investors around this is thinking through the risk profile of some of these contracts. They typically tend to be more fixed deals, which transfers the risk to On Location. How do you get comfortable with that?
Yeah, where I get comfortable is not doing those deals. Doing a minimum guarantee is not something we're in the business of doing going forward. I mean, will there be one-offs where it makes sense and the demand is so insane that the risk profile is lower, so therefore we have more tolerance? Yes, but by and large, we want splits. We're the leader in the industry. Most importantly, it's not about just the portfolios; that we do it better than anyone. I mean, there is no peer as it relates to the quality, the delivery of quality and high premium experience that On Location brings to the table. You don't do work with the Masters in Augusta unless you're the best of the best. Period. They are very careful about who they surround themselves with in terms of partners. We don't take that for granted. We keep investing in the product, the people, and really the brand partners that we have. So there are some properties to pick up here and there, but we have our hands full with UFC, WWE, and more opportunities. I don't want to get out of our core, which is sports. That's what TKO is. And these days, every rock star wants to be an athlete, and every athlete wants to be a rock star.
Mark, I can't let you go without digging deeper into capital allocation. You mentioned earlier the free cash flow generation profile of the business, leverage modest, not too much capital intensity or needs at the moment. How do you think about capital allocation within that capital returns versus M&A?
It's the priority. Because M&A, we're not out there hunting. We'll be opportunistic and we'll listen and we'll follow up on any phone call that might come our way. Or if there's something out there we think we can pick off or bolt on, fantastic. But capital return comes first. I mean, that's frankly what our shareholders want. And when you're going to be producing the amount of cash that we expect to bring in and year out, given that we just need to fund our operations, have enough for working capital, the answer is going to be the dividend, which we answered, and more of a share buyback. It's really the opportunity here. I mean, the float is already limited, just given the amount of shares that Endeavor Group Holdings controls. I think that's the bang for the buck, and we will be opportunistic with a plan there in short order.
You mentioned the commitment by end of 3Q to start the share repurchase.
Yeah, I mean, we'll put something out in due time. But I think that most people saw that we upsized the term loan by $1 billion, and meanwhile they know that there's a share buyback on the horizon. So you do your own homework and make your own prognostications. But we're moving on what we said and promised we were going to do in time by the deadline at the end of the third quarter.
Are you ready?